Aaron Dunn is here with me. He's portfolio manager and co-head of value equity at Morgan Stanley Investment Management. It's good to see you.
Good to see you again.
So I don't want to overstate it, but I think Moore and Ed Mills mentioned this yesterday. We've all been focused on the deficit impact of this bill, which is going to be massive. And you'd think that's all the market would care about. But is it starting to get excited about all the goodies and the potential stimulus that could be coming down the pike?
I think so. I think really the market is very focused on, or has been focused on, tariffs, right, and the negative impacts of that. And really that's what drove sort of this technical sell-off in the market of the last couple months. But what I think we're going to start to see is we laid out what tariffs were. We laid out a big number. We're starting to come off of that, right? And so I think that's going to be an incremental positive. The next positive is potentially what comes out of a tax bill. And you think about how they offset a tariff impact. It's going to be through stimulating parts of the economy, right? So one of the big issues we have is that C-suite executives have lost a lot of confidence in how they spend money, how they allocate capital. And so what we need is to instill that confidence to do so. So we think out of this tax bill are going to come some stimulative measures that, whether it be CapEx, expensing, whatever it may be, that really drive potential sort of stimulus and more confidence with companies. Because that's really what we have right now is a crisis of confidence
shock in the C-suite. Really, absolutely. We hear about it every day. So it goes back to the playbook from the first administration where they did the tax cuts first and then started some of the tariffs. But because the shock has already been so great, I mean, there's literally the freight sector is literally trying to figure out what to do right now. Retailers are trying to figure out where to supply, product for Christmas and so forth. Is it going to be now? And Ed Mills yesterday said the stimulus from this could be $500 billion to almost $1 trillion in size. So, I mean, that is super meaningful.
That is. It's a big number. And I think the market's really going to start to pay attention to what that means. And I think we can get that confidence back in the C-suite and with investors. And I think that's going to be a big piece of sort of the back half of the year. To date, we've really had this crisis of confidence. We've had investors we've had a sort of a degrossing of positions, a lot of technical aspects since early March that have really impacted this market. And what I think we're going to see through summer and into fall is fundamentals really start to matter, right? We're getting a lot of mixed signals. We're getting consumer sentiment remains low, but consumer spending is good. Look at MasterCard today, right? GDP, negative first quarter, probably big.
Then McDonald's same-store sales down 3.5%. I'm not saying they're the whole economy. MasterCard is a better proxy, but it's all of these differing points.
Right, but that's the low-end consumer, right? If you look at the low-end consumer, McDonald's said 10% down for sort of the low-end consumer spending. Wow. So that's a big number. That's almost recessionary level. So, but spending at the upper end remains very good, right? And we've talked about this before. So I think what's going to be really interesting is how this plays out in the back half of the year, because I think the market's going to start trading on fundamentals more than the technical aspects we've seen. And we see that today with the AI, the tech stocks. These are very good businesses. They're recurring revenue models. They have fantastic balance sheets. We think quality of the business really starts to matter as the year progresses.
Yeah.
That hasn't happened to date. Really, the big correction we had was very quick and indiscriminate, right? So I think that's the most interesting feature of this market today is you're going to start to get this economic data. You're talking about employment cracking. ISM was weak. A lot of the aspects of that are very weak. So we'll see what that does. I think that can move really quickly if the tax bill really instills more confidence in the executives.
Back in a positive direction.
Exactly.
So